Welcome to Trading Nation. I'm Seema Modi. The Federal Reserve kicking off its two-day policy meeting, and the stakes are high. It comes as the stock market is hitting new record highs and inflation concerns are only heating up. Let's get insight from Jim Bianco, president of Bianco Research. Jim, good to have you on. Such a critical time for the market here, from energy to food prices. First, let's talk about inflation. How do you see the Fed tackling questions around higher prices?
Well, they're going to have a problem with that because everywhere you turn, prices are up and they're going higher. Food prices are at multi-year highs, if not a decade high. Energy prices are up. Industrial commodity prices, by some measures, are at an all-time high. Not to mention services are starting to move up, and now we're starting to see wage inflation. The Fed likes to use the word transitory, but every day it looks less transitory and, to use the opposite word, more persistent. And that's going to be the challenge that they're going to have, is to push back from this idea that we have persistent inflation as opposed to transitory inflation.
Why do you say central banks around the world are in a denial phase, Jim, when it comes to inflation? And does that apply to the Fed as well?
Yes, it does apply to the Fed. What's happened in the markets in the last couple of weeks is short-term interest rates have moved up and moved up a lot, especially in countries like Australia and New Zealand. That is a market signal that they're saying that you're behind the curve, inflation is persistent, and you've got to start thinking about moving your policies more aggressively towards tightening. Now, none of these central banks want to do that. They're in denial that the markets are telling them that. But eventually, if the markets stay at these high interest rate levels on the short end of the yield curve, signaling that they should be moving faster, they'll eventually come around to accepting that. And I think you're going to start to see more aggressive rate hikes in 2022 than most are giving credit for right now.
Is the market really appreciating the fact that rates may be moving much higher than anticipated? Because we're sitting on record highs, Jim, across the Dow, S&P, and NASDAQ.
Yeah, well, the stock market's now a different animal altogether. What's happening there, I believe, is you've got huge amounts of cash in accounts after 18 months of stimulus and people not spending money. And so they're figuring out ways to invest their money. Well, welcome to 2021. There's really only one investment, and that is to buy an index ETF, probably based on the S&P 500, like SPY. So everybody keeps plowing money into those. And what you're seeing is the large cap stocks like the S&P have outperformed the Russell 2000 to the greatest degree in 20 years. In fact, every other time you've seen the S&P outperform the Russell this much, it's always been in a bear market. People hide in the higher quality stocks, not in a bull market like we've seen now. That, to me, is a signal of indexation. Every day that I like to joke that there's electricity on Wall Street, people are buying S&P 500 ETFs. Those stocks go up. 25% of that money is the FANG stocks and Tesla. And they just continue to go and go. And if you're not in the S&P 500 like the Russell 2000, those stocks have been languishing since March. They haven't done much of anything.
How vulnerable is the broader market to a pullback, given the concerns you outline here?
Not immediately, but if interest rates continue to head higher and continue to put pressure on central banks and they kind of buckle and say, okay, maybe we ought to start thinking about persistent inflation and raising rates, then the market can be vulnerable. But that's probably not a story until next year, maybe the first quarter of next year. But right now, I'd be shocked if Powell came out with anything that would be remotely considered hawkish at tomorrow's meeting. He'll probably try and straddle the line, but not say anything that's going to upset anybody.
Yeah, an elegant dance always when it comes to the Fed. We'll see what Chairman Jerome Powell has to say. It's good to see you, Jim Bianco. Thank you for your time today, Jim Bianco.
Thank you.
And thank you all for watching Trading Nation. I'm Seema Modi. See you next time.